Hey everyone, and welcome. Have you ever stared at a trading chart and felt like you were trying to read a completely foreign language? Well, don't worry, we're here to be your translator. Today, we're going to demystify some of the most powerful yet simple signals you can find on any chart. So let's get right into it. So, how do you actually read the story that a price chart is telling you? Well, think about it like this. A price chart is just a story about the epic battle between buyers and sellers, and the candlesticks. Those are the words it uses to tell that story. And trust me, some of those words are way more important than others. Here's what we've got lined up today. First, we'll learn the basic language of the market. Then, we're going to decode two super important patterns, the hammer and the shooting star. After that, we'll build a real strategy around them, kick it up a notch with multiple time frames, and then wrap it all up with the key things you need to remember. Okay, let's get right to the heart of it. You know, there are dozens and dozens of candlestick patterns out there, but the ones that really matter, the ones that shout the loudest, they usually have one thing in common: a long wick. These are the signals that practically scream at you that a change in direction might be just around the corner. See, these candles aren't just random shapes on a screen. They are the visual proof of a massive fight. That long wick, some people call it a shadow, that's where one side tried to take control, but the other side came roaring back and slammed the door shut. Today, we're going to focus on two of the most classic examples of this epic struggle. And that brings us to the stars of the show, the hammer and the shooting star. Seriously, if you're new to trading and you only learn two candlestick patterns, make it these two. They're simple, they're easy to spot, and they tell a crystal clear story. First up, we've got the hammer. Now, you're going to find this guy at the bottom of a downtrend. What you're looking for is a small body up top and a really long lower wick. It should be at least twice as long as the body. When you see this, it's a huge clue that the sellers might be getting tired. So what's the story behind the hammer? Imagine this. Sellers have been in total control, just pushing the price down, down, down. They make one last, massive push to send it even lower, and that creates that long wick. But then, bam! Buyers jump in out of nowhere, completely reject those low prices, and push everything right back up. It's a classic story of sellers running out of gas and buyers taking back control. And here's a little pro tip you absolutely need to remember. The longer that bottom wick is, the more aggressive that rejection was. A super long wick is basically the market screaming that the buyer's comeback was incredibly powerful, which makes the whole signal that much more meaningful. Alright, now let's flip the script and look at the hammer's evil twin, the shooting star. You'll spot this one at the top of an uptrend. It's a perfect mirror image, a small body at the bottom with a long trailing wick up top. If you're feeling bullish, this pattern is a major warning sign. The story here is the exact opposite. Buyers are on a roll, feeling great, pushing prices to new highs. They go for one last big push, creating that long upper wick. But right at the peak, they run smack into a wall of sellers who just absorb all that buying and slam the price right back down. It's a sign that the bullish party might be over. So, let's break it down real simple. Hammer shows up at the bottom of a downtrend, has a long lower wick, and signals a potential move up. Shooting star appears at the top of an uptrend, has a long upper wick, and signals a potential move down. Got it? One rejects the lows, the other rejects the highs. Okay, listen up, because this might be the single most important thing we talk about today. Knowing what these patterns look like is one thing, but actually trading them is a whole other ballgame. And the number one rule is this: a single candle, no matter how perfect it looks, is just a clue. It is not a command to hit the buy or sell button. This quote right here, this should be your golden rule. A hammer candle showing up is a reaction. It doesn't automatically mean the trend is over. You have to wait for more evidence, for confirmation that things have actually changed. So how do you get that confirmation? Easy. Just follow this simple 3-step strategy. Step 1, find a key level on your chart, a place where the price has bounced before. Step 2, look for your hammer or shooting star to pop up right at that key level. Context is everything. And step 3, the most crucial part, wait for the next candle. For a hammer, you want to see a big, strong green candle close above it. That's your proof that the buyers are for real. That's your signal. Alright, so you've got the basic strategy down. Ready to level up? Let's talk about using multiple time frames to find what traders like to call sniper entries. Basically, getting into a trade earlier with more precision. Sounds good, right? The idea is actually pretty simple, but it is incredibly powerful. Think about it, a single candle on a daily chart is actually made up of 24 one-hour candles. So by zooming in from the daily chart to the hourly chart, you get to see the entire battle that created that one daily candle, but in way more detail. So what's the big deal? Why does this matter? Well, because when you see that detailed story playing out, you can often spot the exact moment the trend is turning, sometimes hours before the daily candle even closes. This lets you get in on the trade way earlier, which can seriously cut down your risk and boost your potential profits. Let me give you a perfect example of this. What looks like just a simple hammer on your main chart could actually be a whole reversal pattern, like a descending triangle playing out on the hourly chart. If you spot that smaller pattern forming and breaking, you get a much clearer and earlier signal than if you just waited for that one daily candle to finish. Wow, we've covered a ton of ground today, right? From the basic language of the market all the way to a full trading strategy. So let's take a second to recap and really lock in these key takeaways so you can start applying them. Okay, here's what you need to burn into your brain. 1. Hammers and shooting stars are your clues for potential reversals. 2. The longer the wick, the stronger the signal. 3. Never, ever trade these in a vacuum. Always look for them at key support and resistance levels. 4. Be patient. Wait for that next confirmation candle. And 5. To really up your game, zoom into those lower timeframes to get the full story and find those sniper entries. And that's a wrap. You now have a solid foundation for reading some of the most important stories the market tells every single day. So I guess the only question left is for you. With these new tools in your toolbox, where are you going to start looking for your first big opportunity? Thanks so much for tuning in.